Why are veteran leads the best leads in the industry? What can make them amazing for you as an agent? And how can you be extremely profitable? In this video, I'm going to be breaking down those exact steps. My name is Trey. I'm the owner of Agent Lead Lab. In the past 4 years, we've helped well over 700 agents issue pay $40,000 per month, which essentially means deposit $40,000 per month. And on this channel, I try to talk about the strategies, tactics, and behaviors that those agents are doing and how you can go out and execute as well. So as always, make sure that you like, comment, and subscribe. And let's hop right in. Real quick background for how we got here and why I'm talking about this today is because I've been having a lot of conversations about what makes vet leads so good. Okay, so a lot of people are asking, like, what makes veteran leads so good? Why are people like so fascinated with them? And what I've quickly understood and come to realize is that most people don't really get it, right? So let's just break it down in terms of like, and I haven't even looked up a lot of this stuff because I just know it from our agents. But let's start breaking each thing down. So you all hear me talk about demographic behaviors, okay? So what does that mean? Okay, that essentially means, what does this demographic have that creates them as a specific lead? Okay, so I have a video where I break every single lead type down based off of demographics. So like final expense is 50 to 85-year-olds. Well, veterans are just, well, really 40 to 85, honestly. Veterans are essentially just 40 to 85-year-olds who are subcategory veterans. Now, why do you want to target that demographic? It's because that demographic has a certain type of behavioral pattern. Okay, so let's just look this up. Let's go to ChatGPT. If you had to define what behavior traits do veterans have, how would you define it? Keep it simple. Third grader level, compare to normal people in that age range. Okay, so let's see what it comes up with. And I do use Claude a lot, y'all, but I like GPT for like quicker questions. It's like my Google. That's how I do it. If I actually want to build stuff, I use Claude. That's how I distinguish the two. And if you're a life insurance agent, you should kind of do the same thing. Non-veterans compared to non-veterans are like their age. Okay, so tend to be more disciplined. Use the rules, schedules, and what needs to be done. More direct. Team focused, loyal, respect structure, mission focused, more prepared, independent, protective, value respect, less trusting at first, right? This can be one though with respect though, because respect is really big with them. Strong sense of identity, comfortable sacrifice, like clear answers. The biggest difference, average person, what I want to do, veteran mind says what needs to be done. From a marketing sales perspective, these are the strongest things: service, loyal, protection. Okay. Now, the reason why I'm bringing this up is because you want to understand that what is a veteran? Like, what defines somebody as veteran? They served. They understand the value of life. Death is in front of them a lot. You don't need to like paint this picture. They know it's life insurance. They know they have to pay. It's not confusing. You're not sitting here trying to re-explain to somebody what that process is, right? So understanding this demographic knows what it means relative to why they are getting life insurance. Now, a lot of people don't get that because they're like, well, aren't they just veterans? Like, what makes them special? Okay, so here's what makes it special. It's super easy, okay? They have veteran benefits, and that is from a Social Security, disability, pension. So let's go here and let's say, what are some of the veteran benefits, disability, pension, Social Security, average amounts that a veteran can get based on their disability rating, how much money they typically get? I'm looking for monetary values on the average statistic, and how does it break down for what veterans do receive? Okay, what we're trying to identify is how much money they have. Because when we talk about markets, it's like final expense is cool, but most people can't afford to spend $100 a month on a policy, right? So it's going to pull it up. But you have to understand and recognize that as an agent, you want to be searching for the highest ROI demographic. Now, the reason why people like veterans is because it's still a straight line sell. Now, mortgage protection, be it that I love mortgage, and IULs, be it that IULs are amazing, IULs don't pay out that much if you actually structure them properly. Just call it what it is. If it's not for the general life insurance. Now, if you're just slinging life insurance, then cool, and they know that it's death benefit heavy, fine, right? If you're talking about the difference, though, when it comes to mortgage protection, you're basically taking a 75 or a 60 to 75-year-old, because those are most people that are going to be filling out these forms online when you're paying from leads from lead vendors. Yes, you'll get some that are in their 50s, but most of the time it's going to be like high 50s, low 70s, looking for, $80,000 to $150,000 to cover their loan. And then your job is to basically talk them down to how equity protection makes more sense, because most of these people are banged up. Okay. Now with this, they're going to have a lot more money. So this is the VA disability compensation, right? But check it out. A disabled veteran receives about $4,319 a month, or $51,000 for a year, before any additional qualifying amounts. The average disabled veteran, right, is getting about $1,400 a month. And mindful, these people are still working. Like, this isn't like if you got 80%, you're getting $2,000. A lot of these people are still working. They still have jobs. They have other income coming in. Okay. 70% disability, right? Social Security disability, right? So now it's like another $1,600 a month. So then the question is, they're getting $5,000 a month. They're getting like $6,600 a month, right? So it's like when you talk about their pension, you just start adding it up, and a lot of these veterans have a lot of money. And you can go look up this, but this is important for you to recognize, because, and then depending on what they have, what specific coverage, and let's look something else. Let me see here. Oh, my bad. I'm brain farting. Yes. So depending on what coverage that how much they're getting, not coverage, how much they're getting per month will then determine how you pitch them, because it depends on what they have left over. Like, you have to recognize that. If you don't know that, then it's like you're not, your job with each demographic is identify what the pros and cons are. So I talk about that a lot. One of the most immediate pros is that you're dealing with a demographic that can have, $4,000 to $6,000 in just monthly benefits, and they're 60 years old. They're still working. So these people got jobs. Businesses. So that's just like, oh, I get that money. Yeah, cool. $300 a month is nothing. Like, if you're really, really, really putting two and two together, you can sling some really big policies, right? Now, yes, you can have people that are banged up, that don't have a lot of money. That can't happen, but understand the likelihood that happens is a lot lower. So when you start pitching and you start actually putting concepts together that make sense for them, they're willing to buy, and it's not complex. It's a super straight line sale. They're also extremely disciplined, pretty dedicated. It's not a lot going on. So you can just easily, put them into a plan, and they're pretty much good. The chargebacks aren't crazy as long as you're putting them in the right spot. Like, you're not slinging final expense. You're not slinging call-ins, which I like call-ins, but if you do call-in, it would be better to have a specific call-in. So like a veteran call-in. You have traditional final expense call-ins. Those are okay. I'm not saying they're horrible, but it's pros and cons. You're dealing with somebody who's just like clicking all day, and they still have that demographic behavior. Yes, you're changing the way in which you're getting that client, but you're still dealing with the same demographic. That's how you need to look at leads. If you don't understand and know that, then you're shooting yourself in the foot. If you don't know the demographic that you're buying a lead from, you are shot as an agent before you even start. That's the most important thing. That will frame you for everything. If you know who you're dealing with, you have proper expectations, you're fine. You're dealing with a homeowner who's working, you're not upset when they don't pick up during the middle of the day. These leads don't pick up. Yeah, dude, they're working. Makes sense. Oh man, I want to talk to people that have a lot of money and they know what IUL is and they're very educated, but I'm calling them at 10 o'clock because that's what's the most convenient for me. No, I'm calling them at 6. They're not off work. They don't get off work till 7. They're running a business. It's like, you have to understand and be okay with realizing that each demographic has its pros and cons, and you have to make the decision on what's most important to you as an agent, and then start playing the game of what that ROI is actually going to be. That's how you gain leverage with the leads that you run. Now, we're not talking about like intros, closing, phone scripts. Your upline's responsible for that. I have some free videos, but you're going to learn all that. What I'm talking about is your expectations for leads, because that's all I do all day is deal with people that want to buy leads here, do this, do that, right? So hopefully this video helps. It was a really quick one. Let's have a great, amazing week. And as always, please make sure to like, comment, and subscribe. I'll see you guys next time.